Welcome to the audio press release, APR, powered by IBM. This original production delivers market and sector insights, as well as executive interviews with innovative executives shaping the future in fast-moving industries, and may feature a client partner of IBM or one of the 75-plus investor-focused brands within IBM's dynamic brand portfolio. As multifaceted financial news and publishing company, IBM leverages its extensive distribution network, utilizing multiple proprietary corporate communication tools to introduce both public and private companies to a vast and diverse audience of investors, consumers, influencers, journalists, and other targeted segments of the public. IBM may have received compensation to produce this audio content. Please be sure to read IBM's entire disclaimers for full disclosures. This article has been disseminated on behalf of Nightfood Holdings Incorporated and may include a paid advertisement. Network Newswire presents how automation is transforming service speed, revenue, and high-demand hospitality environments. Across stadiums, convention centers, airports, and live event venues, labor shortages are no longer just a staffing problem. They are a revenue problem. Persistent workforce gaps in hospitality and food service are colliding with rising demand, creating long lines, slow service, and lost sales during peak periods, according to data that shows sustained hiring gaps and high turnover in leisure and hospitality occupation. At the same time, industry research indicates that automation and service robotics are emerging as the fastest scalable response to these constraints, shifting from experimental pilots to commercially deployable systems that increase throughput without adding labor. The structural shift directly connects to Nightfood Holdings Incorporated, NGTF, which is building a hospitality-focused AI robotics platform through its subsidiary TechForce Robotics, positioning the company to help venues capture incremental revenue, improve service speed, and stabilize operations in peak demand environments. The company is leading the way in uniting hospitality with AI robotics innovation, joining other AI and robotics leaders such as NVIDIA Corporation, Tesla Incorporated, Richtech Robotics Incorporated, and Amazon. Disclosure: this does not represent material news, partnerships, or investment advice. The service robotics industry is undergoing a fundamental shift, and TechForce Robotics is one of the leaders. Modern service robotics is increasingly positioned not as a labor replacement, but as a revenue multiplier, with Nightfood and TechForce Robotics operating within this framework. Nightfood and TechForce Robotics are positioned as early movers in the robotics as a service model. Commercial readiness is now the primary driver of automation adoption, and Nightfood's robotics platform is structured around this reality. Nightfood Holdings operates at the intersection of AI-driven service robotics and hospitality automation, a market being rapidly reshaped. Labor shortages are structurally limiting revenue. Hospitality and live event environments operate on peak demand cycles, where a small number of high-traffic hours can determine a large share of total revenue. When staffing fails to match those peaks, the impact is immediate: longer queues, slower service, fewer transactions, and abandoned purchases. The U.S. Bureau of Labor Statistics continue to show persistent employment gaps in leisure and hospitality, with chronic job openings and high turnover rates that have not normalized since pandemic era. In addition, the National Restaurant Association reports the operational side of this challenge, showing the labor scarcity and wage inflation are forcing operators to rethink staffing models and productivity strategies. The report emphasizes that many operators are unable to fully staff high-volume shifts, leading to operational bottlenecks and lost revenue opportunities during peak periods. In high-traffic venues such as stadiums, conventions, and live events, these constraints are amplified. Demand surges occur in narrow time windows, including halftime breaks, intermissions, session transitions, and post-event exits, when service speed directly determines how much revenue can be captured. When labor is insufficient, venues do not simply lose efficiency, they lose sales. This structural mismatch between demand and available labor has turned automation from a future innovation to a present-day operational necessity. This is where Nightfood Holdings enters the conversation as a solution provider rather than a conceptual technology developer. Through its AI robotics strategy and TechForce Robotics subsidiary, the company is positioning automation as infrastructure designed to operate in high-volume environments, increase throughput, and convert peak demand congestion into measurable revenue capture rather than lost opportunity. Throughput, not novelty, defines automation. The service robotics industry is undergoing a fundamental shift, and TechForce Robotics is one of the leaders. Early-stage robotics focused on novelty and experimentation, but today's commercial market prioritizes reality, scalability, and throughput. McKinsey's research on automation in food service showing that the sector is moving towards systems that can perform consistently under real-world conditions, particularly in environments with demand volatility and staffing instability. This evolution is increasingly visible at major industry events where real-world performance matters more than conceptual demos. Large-scale technology showcases, such as CES 2026, are no longer dominated by prototypes, but by deployable systems that demonstrate operational reliability, speed, and integration. Commercial operators are evaluating automation based on output per hour, transaction throughput, and system uptime rather than novelty. Nightfood's robotics strategy aligns directly with this shift. The company's focus is not on experimental robotics, but on commercially proven automation platforms that can operate immediately in real environments. Through TechForce Robotics, Nightfood is deploying systems designed to function during peak traffic periods, integrate into existing operations, and materially increase service speed and transaction capacity. This emphasis on throughput reframes robotics as revenue infrastructure rather than technological spectacle. In high-traffic hospitality environments, the metric that matters is not whether a robot is impressive. It is whether it reduces wait times, increases order volume, and stabilizes service performance under pressure. Automation as a revenue multiplier. Modern service robotics is increasingly positioned not as a labor replacement, but as a revenue multiplier, with Nightfood and TechForce Robotics operating within this framework. Automation allows human staff to focus on higher-value guest interactions, quality control, and service experience, while machines handle repetitive, high-volume transactional tasks. This division of labor increases both operational efficiency and guest satisfaction. Nightfood and TechForce Robotics systems are designed to absorb peak volume and redundancy pressure rather than displace staff, allowing organizations and venues to process more transactions with the same workforce. This approach directly addresses the economic reality facing hospitality operators. Hiring more staff is increasingly expensive and unreliable, while automation provides predictable, scalable capacity. The robotics as a service model further reinforces this multiplier effect by allowing operators to scale automation without heavy capital expenditures. Instead of large upfront investments, venues gain access to revenue-generating automation through subscription deployment, aligning costs with performance and revenue output. This model transforms robotics from a cost center into a revenue engine. Automation becomes a way to unlock trapped revenue during peak periods, stabilize service delivery, and protect margins in environments where labor volatility is structurally embedded. Robotics as a service, lowering adoption barriers. Robotics as a service has emerged as one of the most important structural enablers of commercial automation adoption. Fortune Business Insights projects strong growth in the service robotics market as commercial operators increasingly adopt subscription-based deployment models rather than capital-intensive ownership structures. Nightfood and TechForce Robotics are positioned as early movers in this robotics as a service model. The strategy centers on lowering adoption barriers for hospitality operators by offering deployable robotics through service-based contracts rather than asset purchases. This approach allows multi-location and enterprise operators to deploy automation quickly, scale across portfolios, and generate immediate operational returns without capital strain. This structure is especially relevant for large hospitality groups, convention operators, and stadium venues that require rapid deployment, system standardization, and predictable cost structures. Robotics as a service transforms robotics into operational infrastructure rather than experimental investment. Commercial readiness drives adoption. Commercial readiness, not innovation alone, is now the primary driver of automation adoption. Operators are prioritizing solutions that integrate with existing POS systems, deploy quickly, and deliver measurable performance improvements within weeks, not years. Nightfood's robotics platform is structured around this reality. The company's systems are designed for immediate operational integration, real-world deployment, and measurable throughput improvement. This keen awareness of the market potential positions TechForce Robotics not as a development stage technology provider, but as an operational partner for high-traffic venues. Nightfood's broader strategy also reflects this commercial focus. The company is expanding its hospitality footprint through strategic acquisitions and partnerships that create real operating environments for its robotics platform. This includes hotel acquisitions and hospitality infrastructure that allows for in-house deployment, testing, and revenue generation. This combination of commercial readiness, asset-backed deployment environments, and revenue-focused robotics positions Nightfood differently from many robotics startups that remain locked in pilot phases. Converting peak demand into revenue. Nightfood Holdings operates at the intersection of AI-driven service robotics and hospitality automation, a market being rapidly reshaped by structural labor shortages, rising operating costs, and increasing demand for speed and consistency in high-traffic venues. The company's growth potential is driven by its focus on commercially deployable revenue-generating robotics, offered through its robotics as a service model, which lowers adoption barriers and creates recurring, high-margin revenue. Unlike peers that remain in pilot or R&D stages, Nightfood emphasizes real-world validation, immediate throughput gains, and POS-integrated solutions that directly improve unit economics for customers. For investors, the opportunity is structural rather than cyclical. Labor shortages are not temporary disruptions. They are persistent constraints. Automation is no longer an optional efficiency tool. It's becoming core infrastructure for high-volume hospitality. By focusing on commercially proven deployment, revenue capture, and scalable robotics platform, Nightfood and TechForce Robotics are positioning themselves to convert peak demand inefficiencies into measurable revenue growth and long-term operational value. The audio press release, APR, is an original content production powered by IBN, a multifaceted financial news and publishing company that delivers next-generation corporate communication solutions. Utilizing proprietary corporate communication tools such as news aggregation and syndication, social communication, and brand awareness techniques, among others, IBN introduces both public and private companies to diverse audiences to enhance reach and recognition. IBN may receive compensation for services and solutions provided to its client partners. The owners, officers, and directors of IBN or financial analysts mentioned in this production do not hold any position in and do not intend to trade the securities in their own accounts. This production is not an offer or recommendation to buy or sell any securities that may be mentioned in this production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries inherent investment risk. Listeners should review the company thoroughly with a registered investment advisor or registered stockbroker. This production by IBN is not purported to be a complete study of the featured company or other companies mentioned. Information used in statements of fact have been obtained from featured companies and other sources, but not verified nor guaranteed by IBN as to completeness and accuracy. Such information is subject to change without notice. Please read IBN's entire disclaimers and disclosures at www.ibn.fm/disclaimer. Thank you again for listening to the audio press release APR powered by IBN.